Let's go straight to the US, and in a few minutes here on the programme we'll be with Katrina Perry, who's in Ohio today, gauging the mood among businesses and ordinary Americans as we approach the first 100 days of the Trump administration. But let's start by checking in on the markets. Well, the New York Exchange opened in the last half an hour or so after more market turmoil yesterday. Another wave of uncertainty after Donald Trump made it clear he wants to fire the Fed Chair Jerome Powell. Legally, it's thought he can't, but that may not stop him actually trying. All of that, again, scaring investors. So let's go live to New York and to Erin Delmore. And Erin, the Dow is on course for the worst April since the Great Depression. No sign of an end to the uncertainty, is there?
No sign of an end to the uncertainty, Matthew, and that's exactly what has investors so on edge these days. You know, a bit of news, solid news about whether the tariff rates could be lowered or permanently adjusted would really go a long way towards shoring up investor confidence here, but we're not seeing that. Instead, we're seeing pauses and rumors of negotiation and a sky-high tariff rate on Chinese imports into the U.S. and U.S. goods imported into China. So what does that mean? Well, yesterday we saw all three major U.S. indexes close more than 2% lower, and now we're a bit of a bump up back this morning. You know, right now, all three indexes are in the green, edging close to 2% up, seeing a little bit of that bounce, a little bit of shoring up. But again, it just comes after a very sharp sell-off yesterday. And to put things in context, Matthew, we so often talk about these movements up and down. But if we go back to April 2nd, the day when President Trump announced his so-called reciprocal tariffs on Liberation Day, we now see all three major U.S. indexes more than 9 percentage points down since April 2nd. That, for me, is the headline.
It is really interesting what is going on, because normally when US stocks fall, so do foreign stocks. That is not happening at the moment. Investors switching from American to foreign stocks, some of which have had their best results inside the last 52 weeks. So that is new. Now, given what you were saying, what is happening on the markets, yields from bonds again going up, there's pressure on the dollar, and that is putting enormous pressure on the president on economic policy, isn't it? Which partly explains why he's going toe-to-toe with Jerome Powell.
Yes, I think you've really put together well all of the pressures that are facing the economy now. And President Trump has found his boogeyman in this. He's decided to target Fed Chair Jerome Powell. And we see this in repeated posts on social media. You know, he's nicknaming the Fed Chair Mr. Too Late. He's calling him slow. He called him a major loser. These are pretty classic types of techniques by President Trump to put pressure on people in government who he disagrees with. And the disagreement right now is President Trump thinks that the Fed Chair and the Federal Reserve as a whole should lower interest rates, which he says would make borrowing costs cheaper, and they would make borrowing costs cheaper for consumers. But the Federal Reserve here is trying to safeguard the economy and trying to keep a recession from taking hold. They have two mandates here. One is for maximum employment, and the other one is for price stability, and they're trying to fight inflation. So Federal Reserve Chair Jerome Powell has indicated that the Fed is not ready to cut interest rates, and this is really what's leading to that standoff. Chair Powell has said that he can't be terminated by law, and he intends to serve out his term until his post is up in 2026, spring of 2026. But President Trump has said, if I want him out of there, he'll be out of there real fast.
Yep, hence the uncertainty. Erin, thanks very much for the latest there from New York. Now, also in the last hour, the IMF has downgraded US growth forecasts by nearly 1%, 0.9%. Last week, we heard the managing director highlight the dangers of Donald Trump's tariffs to the global economy. Well, with me here in the studio is Darshini David, our Deputy Economics Editor. And as I say, Darshini, a downgrade from the IMF. They went through a variety of countries. Just talk us through the headline figures here.
Well, it's interesting, isn't it, Matthew? We've talked about this a lot in the last few weeks. 2nd of April, of course, President Trump basically ripping up the World Trade Order as we've known it. Now, that's caused the IMF, unsurprisingly, to rip up its forecasts as well. It's brought out several scenarios, in fact, because like the rest of us, it doesn't quite know what's going to happen. These policies keep changing all the time. They have downgraded global growth. They say it'll be somewhere between 2.5% and 3%, or maybe just over 3% this year on average. That is quite a downgrade from the previous figure. When you look beneath the surface of what's going on there, it's not going to surprise you to hear that it's the US where we're seeing that major forecast change, now expected to expand by less than 2% this year. Now, that doesn't mean that they're forecasting a recession there. So that's part of the reason why we heard Erin there talking about the stock markets and Wall Street. It's part of the reason why you've seen the stock markets rallying a bit in the United States. Having said that, we've heard the chief economist from the IMF talking in the last hour. He says the risk of recession in the US is close to 40%. That's up from 25% in the autumn. So you can see where the risks lie.
Quite a jump. Now, as well as what you said about the US, take me through the downgrade to the UK, because as well as a downgrade in growth, they've also pointed to inflation figures that perhaps may well be, if it plays out this way, the worst in the G7.
It could be, but there's some interesting things going on at play here. Now, as you mentioned, there's been a downgrade to the UK's growth forecast. It's 1.1% the IMF reckons for this year. That might sound familiar because that's broadly in line with what official forecasters here in the UK are saying. And indeed, the IMF, when they were asked what exactly is going on here, talked about the tariffs. They also talked about some of the domestic forces that play here. Remember, there's been tax rises, etc., etc. And again, some of the inflation changes we're likely to see are due to things like the way energy prices are regulated here. So those things in combination make it quite tricky when you're looking at, quite frankly, the economy after a tricky few years over the last few years as it's been.
It is tough, given the government here keeps talking about growth, and that has not been going the way they wanted. To have a downgrade like this, well, that is more problems on problems. Let's talk about the sort of trade deals that all of these countries are trying to negotiate. I was struck by something the Japanese delegation said over the weekend, where they said it is proving difficult to make progress because every time they meet with American officials, there is a new thing on the table. That is problematic. That is something we've heard before from other countries as well, which suggests some of these deals may well not be in the short term that perhaps people are hoping for.
Indeed, because the clock is ticking here. We do know, don't we, that a lot of these countries have only got a temporary stay, so to speak, when it comes to those extra retaliatory tariffs, so-called retaliatory tariffs, we should say. But on top of that as well, the US holds a lot of these cards. Trade negotiations are always tricky, but there is this deadline. So you can see more and more countries, the UK included, sort of thinking, well, actually, we're never going to go back to where we were before with the complete elimination of the Trump tariffs. We may just see some of them stopped in their tracks. But as you say, every time they come back to the table, we're hearing this from a lot of countries, more and more obstacles are put in their way. It's going to be nail-biting times. The IMF says if we were to take away these trade barriers, we get back to seeing the kind of growth prospects that we talked about before. That doesn't seem to be happening in a hurry.